Give us your take then on what we're seeing on the mainland markets for starters. 2 days where we've been in the red, an unconvincing set of moves in the market so far today. Are we hitting a ceiling for Chinese equities? What is the next catalyst?
Right, good morning. So if we look at the equity market as a whole, we look at the relative valuation between equity and bond because we are running a mixed asset class strategy. So if we look at the latest relative valuation, Chinese equity market do have a slightly more expensive kind of trend versus its bond market. So if you look at the relative valuation, the yield spread, earnings yield spread versus the bond yield spread, it's actually slightly below the historical average since 2-3 months ago. So we are heading towards a little bit more relative expensive kind of zone for equity versus bond. So I think that's one of the reasons why we are seeing a little bit of sluggishness of the equity market. But having said that, it's not that up to very extreme kind of valuation kind of zone. So I would say overall, the momentum is still in favor of equity side, but we are actually mindful of the relative tightness of the equity valuation overall for the overall market.
So how does that play into the way that you are repositioning or reallocating in the Chinese mainland equity space? I know you're still overweight, but you do have those concerns about valuation.
Right. We do have overweight in equities, but as just mentioned, because the valuation is getting tighter now, so we start to turn into more neutral kind of position, but there's going to be done on a more gradual kind of progress. And within equity, and we do also find there's still some kind of good opportunities for us to position ourselves within our equity space. In particular, within our focus is more on the income-oriented kind of strategy. So we still find lots of interesting and good potential kind of investment candidates within our income-oriented universe at the moment.
Right. Lilian, David here. So apart and on top of that, you're looking at cyclicals, industrials, materials, utilities. Talk to us then about income separately. In terms of dividend growth, that's not a theme that many people talk about when it comes to investing in China. Is there one specific sector that stands out to you that might be able to deliver sustainable dividends moving forward?
Actually, what we have seen is, in particular, within the consumer durables and also industrial, and also material as well. There are quite a couple of the leaders, in particular market leaders, who have been able to deliver a sustainable dividend earnings growth and also dividend growth. And in particular, when we look at the situation during the COVID-19 kind of period, market leaders, in many industries, they actually show a stronger resilience in terms of top line, profitability, and also cash flow. So that actually could be very supportive to the potential dividend kind of growth going forward. So what we are seeing right now is that, in particular, given within the equity market, if you look at the valuation, because if you look at the price-to-book ratio of growth names in both onshore and offshore market, they have already reached their respective peak in 2015 and 17, while many of the other names or other sectors are still moving in a very narrow kind of range in terms of the price-to-book. So it's actually quite interesting time to revisit this kind of income-oriented equities because they've got strongest support in terms of valuation. And from a fundamental perspective, we are also seeing some sequential improvement driven by the overall economic recovery in China. So if you look at the recent kind of economic data, the recovery is more broad-based and better than expected. So this should translate to earnings growth. In particular, when we look at 2021, we are expecting the earnings growth gap between the growth-oriented stocks versus the traditional sector should narrow versus the huge gap in 2020. So with the narrowing of this earnings growth gap, that should drive a bit of potential re-rating of the traditional sector. So that's actually why we think it's actually a very good timing to revisit all these kind of income-oriented names. And also, as I just mentioned, the leaders, those leaders in the respective industry, they have actually shown very strong resilience in terms of earnings and cash flow, and we expect it's going to gain more market share because the weaker players in the industry are being shaken out during the kind of crisis. Yeah.